Good afternoon, traders. This is Christian Fromhertz, Tribeca Trade Group, with your Thursday end-of-day market recap. So today is April 7th, 2016, and the market finished down about 1.25%. So some really interesting price activity today, and it almost looks like we're starting to break down a little bit. There was just a question on CNBC that I just heard is what kind of damage was done in the technicals today? Well, in the S&P, I don't see any major technical issues. However, there was a lot of things that went on in sectors today, which may have gave some warning signals. So, first of all, what I found particularly interesting was that the S&P was kind of in a rut in terms of volatility. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 consecutive days where the S&P did not see a 1% move greater than or less than 1% in 14 straight trading days. And then starting on Tuesday, we have 3 consecutive days of moves just around 1%, plus or minus. So on Tuesday, market was down 1%. Yesterday, Wednesday, market was up essentially 1.1%. And then today, down another 1.2%. So volatility looks to be back here in the short term. And what I see on the daily chart is a lot of consolidation right around this top of value on the daily chart. This is the red line on my chart. This is right around, let me just zoom in a little bit, 2032.75. That's the level of support that I'm watching. And a lot of times here in the last week, this is Friday, and this was the first indication that we touched or came very close to touching this particular level here. This was right before Friday's jobs report. That jobs report was positive. We also saw positive economics at 10 o'clock in the morning, which kept us going. We finished close to the highs. And then on Tuesday, we had a down day of about 1%. We did touch, again, the top of value, and we managed to rally above it. Same thing on Wednesday. We came close to touching it and finished close to the highs of the day. Today, we ended up closing, we did fall into value briefly, but closed above it. So no technical damage in the S&P. However, a lot of sectors looked very interesting. XRT is one sector that I've been watching as there's been some really great strength. A lot of sectors, had formed a bottom here in mid-February, but XRT, the retail ETF, has had some really good strength, has gotten overbought here, for about a week or so. And then we finally see this crackdown and we closed way below value. The XRT ETF, one of the worst performing sectors of the day, down 2.8%. And what I find particularly interesting, if you take a look at a chart of XRT overlaid with the S&P, which is this green line on the chart, you can see that these two areas have moved up very nicely together. XRT has actually outperformed a bit. You could see the price action above the green line. And then all of a sudden, we've seen this breakdown here. So we haven't yet seen it in the S&P. However, this to me is shedding some light on what the next move could be in the SPX. The other thing that was pretty notable today is all that we saw a huge pickup in put activity in the retail sector. It started the day with Best Buy, which saw over 5,000 May 30 spot 55 contracts go up. Ross Stores, one of the biggest orders I've ever seen for this company. Huge put order in this name, opening trade, May 55s, over 13,000 contracts traded here. Macy's saw over 2,000 put contracts, all opening trades. All of these were opening trades today. Urban Outfitters also saw a put buyer. Again, all opening trades here, 2,700 contracts as well, going out to May. GPS, we've seen a huge amount of puts being bought in GPS this week. Take a look at GPS after hours. They reported same-store sales, and they are down from 27.68 to 25.10. Costco also reported same-store sales. This was last night, by the way, or this morning. They also got run over. They had decent numbers, but they were not as good as expectations, what expectations were looking for. So they ended down 3%. We also have, which could also be responsible besides the same store sales, but we also have an economics retail sales that are out next week. So besides the weakness in retail, the other sector that I find particularly troublesome is what happened to the regional banks today. As TLT finished pretty close to the highs of the session, up 1.2%. When TLT goes up, interest rates go down. This is not particularly good for the regional banks. They finished down very close to the lows of the session as well, down 2.7%. And also, a different picture than we looked at in the S&P and the retail sector. They also put in a bottom here in February, but we're one of the later sectors to rally here, but not nearly as robust as a rally as the S&P or as in retail. And now you see this area starting to roll over, very similar to what we saw back in the beginning of the year and towards the end of 2015. And you kind of see the same thing happening in the regional, not the regional banks, the European financials. EUFN is the European financials ETF. And you're seeing this after this had a huge decline back in January. You're starting to see this roll over again. So that also looks like a very troubling area. And you can look at the chart of Deutsche Bank. Deutsche Bank is back to the lows. Credit Suisse also back to the lows. If these things really start to break the early February, late January lows, I think this is not a good sign for the market. So keep an eye on these two areas of the market. What I did see on the positive side today, which I found particularly interesting, a lot of call activity in the rail names. Norfolk Southern, we saw a big call buyer going out to May, close to 6,000 contracts traded. Again, opening trade. CSX also saw around 5,000 contracts traded. Again, all opening trades that I'm looking at. And then finally, KSU. Not quite as big of an order, but still opening trade going out to May. So all three of these rail names saw call activity going out to May. So I thought that was pretty interesting. So that was it. Those are the three things that I find interesting today. I think XRT and KRE, two sectors to watch, to keep an eye on, as they were very weak today, fell almost 3% today, very weak. And I would watch the S&P. Take a look at this level. This is the level that I'm watching. Again, I'll repeat that again. That is 2032.75 in S&P futures. So that's what I would keep an eye on for tomorrow. We also have this conference that is taking place, I believe 5:30 Eastern is when Yellen speaks, as well as with former Fed Chairman Alan Greenspan. So keep an eye on that for today, anything notable that they say, and keep an eye on this level as well, 2032.56 in S&P futures. So that's it. Have a great night, and I will see you in the Tribeca Trade Group room tomorrow. For those looking to sign up to get into the room, you can go to tribecatradegroup.com and you can sign up to one of our packages to get involved in the daily trading room. Have a great night. Thank you.